Industries from fossil fuels to pharmaceuticals could feel the impact of a Biden-Harris administration. But first, it's important to understand the limits of what President Joe Biden can do. A potentially split Congress will constrain his ability to roll out plans for a large-scale fiscal stimulus, tax cuts, healthcare, and climate legislation. In theory, certain industries could benefit from one party or another winning. Under a Biden presidency, renewable energy, infrastructure, and stocks affected by trade policy stand to benefit. But other factors beyond Washington can influence how industry perform. Hi there, welcome to Investors Game. Today, we're gonna talk about how Biden presidency will affect the stock market and US economy. Don't forget to share this video with family and friends and hit the like button if you haven't done it yet. Now, let's get started. Joe Biden administration may lead to wide-ranging changes to public policy. Here's what investors and citizens may expect for a Biden administration. First factor to impact the stock market can be repealing tax cut. David Cass, a clinical professor of finance at the University of Maryland, speaks to Biden's plan to reverse in 2017 tax cuts, which slaps corporate rates from 35% to 21%, which is good because if they want to get a loan, it's cheaper, but Biden has called for raising the corporate rate to 28%. The increased tax rate will result in lower profits and likely lower share prices, and this effect may be more than offset by a larger fiscal stimulus package passed by Congress and better trade relationship with countries in Europe as well with China. Next, technology sector. In a split Congress scenario, with a Republican Senate and Democrat House, technology stock will perform the best with a Biden administration. A few examples, it's a widely expected that a Biden administration will restore a net neutrality, which experts say will be a good for tech ecosystem. His plan to invest in a higher education and make it more widely accessible could also benefit big tech, which relies on a highly skilled workforce. Next, international trade. The president has broad powers to dictate US trade policy, and President Trump used those powers aggressively in his first term to raise tariffs on US importers of China, goods and coerce the China into promising to buy more American products. In February, China agreed to expand its purchase of certain US goods and services by a combined of $200 billion during 2020 and 2021, relatively to 2017 levels. Experts say he will likely maintain the Trump tariffs on China, but take a more multilateral approach to confronting China in the future, through consulting with allies. Next, infrastructure. Although a Biden victory will likely increase the infrastructure spending, analysts anticipate that a divided government will probably reduce the size of a potential program. Analysts expect infrastructure spending to be focused more on traditional projects like roads, bridge, and overall construction. This scenario will be positive for machinery, building materials, construction, and engineering companies, but negative for stocks of companies connected to climate, alternative energy, and green technologies, given how well those shares have done recently. Eventually, we could see an infrastructure package total over $1 trillion. This will benefit the industrial and material sector that produces heavy equipment or produce material for roads and bridges. If a boom in infrastructure spending is on the horizon, then it's hard to avoid Caterpillar. The world's leading maker of construction and mining equipment, Caterpillar is not purely a play on American infrastructure. Of course, the company has a global presence and should benefit from recovery in emerging markets as well. You probably wouldn't want Caterpillar's equipment in your backyard, but if you're looking to start a major construction project, you are going to order them from Caterpillar. Next, expanding Obamacare. Biden has voted to expand the Affordable Care Act, the healthcare overhaul that former President Barack Obama signed into law in 2010. Typically, this would be bullish for healthcare companies, such as pharmaceuticals and biotech firms, but this positive effect could be potentially offset by a focus on lower drug pricing. Lower drug prices, at least when it comes to Medicare, are a crystal clear priority for Democrat nominee. Medicare is the federal health care insurance program for people aged 65 and older and those with certain disabilities. Regardless, a Biden win will be bullish for health insurance, like United Health Group. United Healthcare is particularly well placed because it specializes in Medicare supplements plans. If Biden is successfully providing a Medicare-type solution, there will be enormous demand for supplemental plans. Although Biden's plan in healthcare may be a bit more nuanced, drug companies are certainly sensitive to politics. That said, Healthcare is a diverse sector, and Biden's policies may benefit other corners of that sector as well. Next, energy. The outlook for energy remains uncertain. It has been among the worst performing sector of the past decade, driven in large part by low crude and natural gas price. For example, Tesla is a natural beneficiary for a Biden presidency. One of Biden's objectives is to make the United States the leader in electric vehicle production and acceptance. And while Tesla isn't the only game in town for electric vehicles, it's clearly the largest and best known pure play. Of course, it's not like Tesla needs Joe Biden to generate interest in its car. Tesla is doing more than fine under a distinctly non-green Trump administration. The CEO, Elon Musk, generates more press than most presidents, and Tesla shares have been on fire. Even after a considerable pullback, shares are up about 415% year to date, and Tesla is now the most valuable auto company in the world. Is this an unsustainable bubble? It might be, but we have to say might, because the shares have appeared to be expensive for years by traditional metrics and yet to continue running higher. So regardless of who becomes the next president, you might want to tread carefully in Tesla stock. But a Biden administration will certainly push electric vehicles, and that only can help Tesla bottom line. Another stock in this sector will be Nextera Energy. Although isn't the most exciting company, it's an electric utility. But unlike many of its peers, Nextera has focused on renewable energy, which makes it interesting in the event of a Biden win. Nextera serves approximately 5.5 million customers in Florida, but is best known as the world's largest producer of wind and solar energy, as well as one of the largest battery storage companies in the world. The company owns and operates wind assets generating close to 50,000 megawatts and has 140 megawatts of storage capacity. For an electric utility, Nextera doesn't sport a particularly high dividend yield at just 1.9%. Nextera isn't a garden variety electric utility, and you don't buy it for the dividend yield. You buy it because it's the leader in green energy and a stock that is likely to catch the eye of social responsible investors. China is the world's leading player in solar panel production, but the COVID pandemic has made many companies question the wisdom of a global supply chain that can fall apart when under stress. Next, marijuana sector. A Democratic administration likely would benefit green projects. Democratic politicians take a more relaxed view toward marijuana and are more likely to support soft drug legalization. Joe Biden doesn't publicly support marijuana legalization at the federal level, or at least not yet. But given his support for criminal justice reform that will include decriminalization for marijuana use. This brings us to Canopy Growth. Canopy is the leader in recreational and medical marijuana products in the United States, Canada, Germany, and the United Kingdom. Like most marijuana stocks, Canopy became something of a bubble stock in 2018. The pop bubble burst a little over a year ago, and the shares today trade for less than half of their old highs. We probably won't see a return to the bubble highs anytime soon, but under a Biden presidency, don't be surprised if Canopy and other marijuana companies emerge as some of the best stocks across his term. If you like this video, don't forget to hit the like button. Let me know in the comment box, would you invest in any of these companies? Subscribe to my channel because every week I'm in YouTube with new content, and do not forget to activate the bell so you don't miss any of our videos. See you next time.